Okay, welcome to the Swing Trading with Cycles channel. It's March 4th, 2023. We're going to do an update on the Dixie here, the US dollar index, and if we have time, we'll look at rates as well. If you're new, welcome to the channel. Always take a look at the pinned comment. Tons of background info for you. Everything is organized by playlist, by asset class, so you can see previous Dixie videos, precious metals videos, broader market, uranium, you name it. Let's start on the weekly chart. So we talked about this in our last video that we were finally getting something, a recognizable daily cycle low. We had these three big up days and then this consolidation and then another move up. So far, the high for the daily cycle has been day 17. And again, some of that content in that pinned comment is info on cycles, so you can get up to speed on that stuff. So take a look. It's a lot of content. Pace yourself. But cycles are great because it gives you a ballpark. So this has been a 17-day rally. Notice for this whole period of 58 trading days, we couldn't put together a rally that was more than 3 days, right? Like this is a little rally that's like 3 or 4, call it 4 days, right? This is a little 4-day rally, they all get stamped out and eventually make a lower low. This was probably the closest thing we got to like, and wow, yeah, that was exactly 4 days. 1 day, you have 1 day up, consolidation. So this is obviously different, right? Like it's in terms of, well, something is different here. And so right now the question is day 17 a daily cycle high? It doesn't seem that way because this is just consolidation. So if we zoom in here, we make a high on day 17. We actually make a lower low that next day, but then it goes green. And then we make a lower, and then we're just kind of oscillating now, because then we go red, we go down, then we go up. So this is essentially, at the moment, a bull flag of this little move here. And so this is day 21. So you could see a world where this makes another move up for a daily cycle high, but then it will decline, it would decline into a daily cycle low. So that's important to be aware of. The broader context here is that if we go to the monthly chart, the dollar made what's most likely a 3-year cycle high in September 2022. That's this candle that's marked by that. That 20 means that was month 20 of the cycle. If it's going to be 3 years, it's about 36 months. You can see this last cycle was 35 months. This was longer, 45. This was 36 on the dot. That was 38. That was 39. It's not about the specific length. It's not about it being exactly the same length. It's more about just a general timing band. And so you have this monster move up for 20 months, and then you've had this move down for, essentially 5 months, right? So we made this low here last month on month 25. And let's just quantify really quickly if we thinking about the context of retracements. So we went up, what is that? I think that's about almost 26 points. And so if we gave back about 13 points, that would be a 50% retracement. And that would be, well, what do you know? So we are just below the 50% retracement point, and we're getting this potential little reversal. Again, it's a daily cycle low that has been rallying for 17 days so far. And it created this bullish monthly candle last month for February. And now we're just consolidating at the upper end of the range on the monthly chart, the same way that we're consolidating on that daily chart. So things get really interesting here, because the bull case is this is your major low, and now we're going to go back up and make another higher high above here. Whereas the bear case is this is just a lower high that's going to then make a lower low. So the same way we thought about the retracement, so we dipped below the 50% mark, but now we've rallied back up. If we think about this decline, so we're kind of thinking about, the decline from here to here, so that's about 13.8. So that would be like 7. Okay, so we're looking for a move like about, call it 7 points up, would give us a 50% retrace, and that would be like right around there. So that's interesting. So that makes sense. If you're able to only recover 50% of the move, you're obviously going to be kind of almost in the middle ground. So if we were able to get back up to ironically where this line is, which would be which would actually be right where the swing high from the monthly swing high from September is. That would be a 50% retracement of this move here. And it's not. This isn't about Fibonacci, to be very clear. This is more just a gauge. If you give back 50% of a move, then it increases the odds that you're gonna approach 100%, which is to say you'll either make a higher high or a lower low, right? In this case, right, that like, so we're kind of thinking about a game within a game in a way. Now, the weekly cycle is going to be what's really going to tell us which way this thing turns. And again, the expectation is this thing goes lower because this was your 3-year cycle high, and we continue to decline for the rest of 2023. And so if you think about where we are in the weekly cycle, this was just week 4. And so we're going to be opening week 5 as on Monday. And so we're right around where we would expect the weekly cycle to start to roll over. Maybe we get up to here, maybe week 5 or 6. But you can see in this weekly cycle decline, and these weekly cycle declines during this 3-year cycle decline period, you had this little rally for 3 weeks and then it rolled over. If we look at this weekly cycle decline, look at that. You have this rally for 8 weeks and then roll over and make a new low. And you can see this is obviously a rally for less than 8 weeks. And so it starts to paint a picture. When you're declining, when you're in the declining phase of a 3-year cycle, the weekly cycle rallies don't last for that long. Look at this little feeble rally. This rally here is what? 3, 4, 5. It's like five weeks. So that's really key, because we're going to be at decision point really quickly, where either we're going to get a much longer weekly cycle rally, or it's going to roll over and make a new low. Right, so think of this as big trend leg down. Maybe we even get up to here, and then it makes its move down. Now, that's not to say we could even get all the way up to like here, right? That would really have people off sides. So I guess you could see a world where maybe this even rallies for like 10 weeks, maybe 8 or 9 weeks. That could get a lot of people doubting things. And UUP would be the way to play it. That's the ETF that tracks the dollar, and so we're going to watch to see, and just tactically speaking, we are set up to open as an inside week next week. So inside the range of this week. So that's a high at 105 spot 359 and a low at 104 spot 094. And so it's got to break out of that range for anything interesting to happen, right? So you imagine we open something like that, and then it's going to be a question of which way does it break. And the implication here is it's entirely possible that, we made a new high this week, that this was our weekly cycle high. And very tactically speaking, because we made a new high on this candle and then it went red, it has the potential to become a bearish outside candle. It didn't finish the job on that week, but you could see a world where this candle here does finish it for it, right? So it does something like that. And if you combine these two candles together, it would be a bearish outside candle of that. And you expect that it would take out the rest of this move eventually as well. So that's the picture for the Dixie. And in terms of rates, as you probably noticed, they've been spiking. Let's just look at them really quickly, just to kind of look at the monthly charts, really just focus on those. So we'll look at the 10 year. If we look at the monthly chart, pretty clear reversal. Wow, doesn't that look very much like a bull flag? Most importantly, look at that. That is a higher high, and that makes this a swing low. It's really, without even going into the detail of cycle count and all that, this was a little decline, and we'll take log off because this was a decline. We bottomed here. This month makes a new high, and now we're getting follow through. Although you can see we've obviously pulled back. That's what this upper wick is. And that is actually TLT making daily cycle low. And so this is going to be very interesting, a battle between a battle within the bonds. And if you look at look at that. So you can see, this bull flag is just getting more and more complex in its structure. So in the case of the 30-year, it did not make a higher high. It did not create that swing low. It also bottomed earlier. The 30-year did. We made this low here in April. Wait. That is not... Let me just refresh this. Right, so refresh the chart. So actually it bottomed in January, or excuse me, I should say December, the 30-year did, whereas the 10-year actually bottomed in January. So 30-year bottomed in December, so in advance of the 30-year. And they say that when sort of the 30-year is a little bit more organic, if you will. But look at this candle setup on the monthly chart right now. And again, this is actually, the 30-year is actually more correlated with TLT than the 10-year is. And if we look inside this, let's see what's happening on the weekly. Ooh, yeah. So you have this big weekly, which makes sense, right? Because right now, the monthly candle is basically just a weekly candle. So if you think about this, again, not to go into, like, this could become a daily cycle that's just about to roll over. This last one having bottomed here on week 18. And we look at TLT really quickly here. As I mentioned, daily cycle low here. Looking, I mean, my God, look at the size of that gap. Now, you would imagine at some point that gets filled, but and I thought it would get filled before we kept moving higher. Maybe it does on the back test of this, but pretty clear you have your DCL here. Let's just see what the time is for that. So that was your daily cycle high on day 25, and then your low on day 43. So, I mean, literally day one of a new daily cycle right now. Pretty early. I'm definitely playing this one. We'll see how much room it has. You're really gonna want to see it clear this cluster here, right? Because this is obviously just kind of a cluster of price action that didn't want to get above this kind of high here. So that's the lay of the land for the Dixie. Lot to watch here. Going to be a very important trade over the next few weeks. Thanks for watching.